Good day, fellow deal makers. Welcome to the Deal Scout. On today's show, we're going to have a conversation with Shaun, who's going to talk to us about money, who's going to talk to us about financing deals, finding deals, and how to get those deals paid for. Shaun, welcome to the show.
Thanks for having me.
Absolutely. All right. So, Shaun, we're hanging out in Miami because that's where you are, and we're having coffee or espresso or something like that. And someone walks up and they go, "Who are you? What do you do?" How do you respond?
Yeah. So I'm Shaun. I'm the principal of Onyx Funding. We're a commercial real estate financing and advisory firm. And what we do is we empower real estate investors and developers to get their deals done. We mainly specialize in the loan origination side and debt broker side. But we are also able to leverage relationships and put people together and pretty much just put the focus on making these deals happen.
Got it. Awesome. So loan origination and debt, that's the core. That's where you spend the majority of your time.
Correct.
For someone who might be new in deal making or even in real estate, what does that mean?
Well, basically, almost every property has a loan on it. That's how these deals get done. And loan origination basically means that we um, put that together. So there's a process to get a loan done. So we have to vet the person who's going to buy or the person who wants to refinance, who owns the property now. So you have to vet them and underwrite them, and then you have to go through the process of vetting the property and underwriting the property. Um, and before you even get to that part, you have to find the best person or bank or lender or debt fund or what kind of institution is going to want to lend money on it, and what kind of terms. So loan origination is the process of making that deal happen.
Yeah, got it. So your job, someone comes to you, they're a real estate investor or someone buying maybe they've been renting for a long time their office building and now they want to buy the building, become their own landlord, right? And they come
Right.
to you and they say, "I need money. I need money to buy this because I can't write a check for 2 million bucks," right? So what does that process working with you versus maybe going to a bank and working with a bank? What does that process? What's different about that?
Yeah, absolutely. Well, it separates into two different places, right? So first of all, there's, what kind of relationships you have and what kind of lenders you know and what kind of banks you know. Um, it is a whole world and a whole, things that it constantly changes. So if you are running a business, whether you're running just a business and you want to own the office that you operate out of, or if you're just specifically a real estate investor, your time is spent on just doing that part of the business as best as you can. That's what you do. It's almost impossible for someone to split their time and do that, plus keeping a pulse on the financing market every day, doing a million deals, seeing how all these things work, and keep up with rates and terms and which bank is going to be, the best one to finance your specific deal. Um, so so in that aspect, someone like me, for example, or any debt broker, really, that's our specialty, is to really know where the market is, what are the terms, what is the best out there. um, and what we really strive to do is to really find that, you know that unicorn quote. So, like that best possible financing solution for your specific situation, whatever that may be. So that's one side of the equation. The other side is to really make that happen. Like, to get a loan is a process. You need to know what you're doing. You have to collect documents. You have to be able to, coordinate the entire transaction, really. So even though we're coming in at the loan side, and you're on the broker side as well, you know how fragile these things can get. So having someone that really is able to control and really kind of, orchestrate the entire thing from start to finish is also very important for the success of the deal, and also to maintain the terms that were negotiated up front to make that happen for the buyer or the owner.
When doing these kind of deals, what typically can go wrong when doing a deal? Let's just say the credit looks good, the asset looks good. Let's say it's cash flowing and the projections look good. But what can make a deal, from your perspective, what can make a deal on the financing side fall out?
Well, first of all, in every real estate deal, there's just so many elements, so many people that are working on it. So like, you have insurance and title can come back not clean. Um, if you're buying, for example, an industrial property, the environmental report can come back, dirty. So there's property stuff that can come up and, change some of these, some of the terms of the deal. The other thing is, and what we're seeing now a lot, unfortunately, is we're in a environment where rates are just exploding, right? They're just changing every day. Guidelines change every day. So one of the most, I would say, delicate things right now, especially for the multifamily or on the permanent financing side, is that you can start a deal today, and deals typically take between 45 60 days to close if it's a bank or a credit union or an agency like CMBS, Fannie, Freddie. And for a lot of these loans, the rates they just don't lock until you close. So you can start a deal today at 5.5% or whatever the market is, and you can end up at something that is higher than that, and that can change your debt service coverage ratio, which is basically your property income versus the expenses and debt, and that can really change the entire transaction. So it can cut your loan amount, it can make the thing not even worth doing. It's that's kind of like where the problems arise now.
Yeah. And being in this industry, us professionals in the, we're incentivized to get the deal done, right? We get paid when the deal's done and funded,
Right.
right? So we could work on a project for 60 days and then day 50, 59 or whatever, the deal could fall apart. So you're incentivized to make sure that the deal's docked out right. You're incentivized to make sure that the deal's going to close, that everything's on the plate. Your job is to worry about making sure the deal gets done on the debt side, right? As you're building this out, like how do you go about staying on top of all the changes with interest rates and what's going on in the market and all the details of the project themselves? How do you do that as a founder?
Well, first of all, we're a small team. I'm very hands-on. We all are, right? So we are about 10 people now. Um, and it's constant. That's all we do, right? Like what I do specifically is between like managing the business and hiring and doing the books and all that, fun stuff of just running a business, right? And hiring people and training and all that. I still do some of these deals I do myself, right? And we're all in the same office, so that's something that I'm really big on, is just having everybody together. No one works remote. We're all in the same office. And we do a lot of volume, so we get to always talk to clients, talk to prospects, and on the other side, we constantly talk to lenders, to either price out deals or work on things that we're already having processed. So we have a pretty good kind of like constant pulse on the market and what's going on.
Yeah. How in the world did you get into this business? Now you're from Israel and you
Yeah,
landed here about 4 years ago. How'd you get into this business and why did you choose this one?
it's a good question. So in Israel, so I was born in New York. We moved to Israel when I was 4. So kind of like moving back was always something that I was thinking about. So when I was in Israel, I had a business. We did mainly sales and marketing consulting for fintech companies.
Cool.
So me and my partner would go into these companies and be kind of like hands-on, helping them with sales. So like training, building pitches, building sales cycles, helping them with the marketing. And my last project with that situation was we got hired to build for a company, a sales organization in Serbia, in Europe. So we did that for a year, took that, just built a whole like sales org from 0 to 100 people, trained everybody, put managers there, and then they wanted us to go do the same thing for them. And I think it was Ukraine. And I was 28 at the time. I was like, this is not scalable. I can't keep building, businesses for other people, even though it was my business to build, we were building it for other people. So I was like, I need to do something for my own. And I already lived for a year outside of Israel. So everything was packed. I was kind of, ready to go. So I went from Serbia for about 2 months back to Israel and just flew out to San Francisco, landed in San Francisco, and started interviewing for some companies. I was an owner for a while. I managed a lot of people. Let me take here a year and go back to being an employee and, see how they do it over here. And that did not work. Couldn't be an employee.
I can't be an employee either. It's very challenging.
Especially because my whole, my company before that and what I'm really good at was, building companies and sales and all that stuff and helping companies improve. So going into these companies or like working at a company where I can just see all the issues and not being able to fix it was just burning in me. So I left that after 3 months. I can't do it.
You lasted a long time over there, huh?
It's 3 months. And then I started working on an insurance product that I have in mind while helping one of my best friends with his startup, which was like a crowdfunding for real estate. So it's called Realtyfolio. So by doing that and looking at that world a little bit, what I noticed is that a lot of these lenders and mainly like Lending Home and Lima and all these people, they're like massive lenders for fix and flippers. They pay salespeople to prospect. So brokerages do that too. So they spend a lot of time on, trying to find numbers online or emails, and, half of your day is spent on trying to find leads. And as a salesperson, at least from my perspective, your time is most valuable just talking to people, whether it's going on meetings or doing phone sales, and not lead generation. Because then, once you have 50 numbers, you call them, half will be wrong numbers. You manage to do 30 calls a day, maybe. So with that in mind, I started generating leads of real estate investors that are looking for financing. And my goal was to just sell these leads to lenders, right? And that's what I did for a little bit. So for a little bit, I mean 2 or 3 weeks, because I got frustrated. So I generated leads. I gave them to a few different lenders to test them, and I didn't get the feedback I wanted. So it wasn't they weren't chasing me or telling me how the leads are, didn't see what the results are. And I thought it's a very quick thing, because that's kind of the market I'm coming from, which was more capital markets and stuff like that. So it's very, fast paced. So it annoyed me. So I was like, I'm going to call these people on my own while I'm, building that other product that I was working on, which kind of got entangled in different, legal structures, because it was insurance. So it's kind of complicated on that end. So I got a license, got a mortgage broker license, and started calling my own leads. Closed my first deal within three weeks. Was a $160,000 bridge loan, something super small. But that kept me going. I was like, okay, there's a business here, there's something interesting. And just by calling some of these people and talking to them and getting deeper into that world and learning and, getting very professional in it, that just sucked me in. So we're here now.
Yeah. you mentioned a bridge loan kind of being your first deal that you did on financing. Why don't you explain what is a bridge loan in the world of real estate?
Yeah, absolutely. So, bridge loan is really what it sounds like. It's a bridge from one point to another. So, um, there's really two or three different types of financing. You either build something, you either need to fix it and stabilize it, or you want to hold it long term, which is a permanent loan or a term loan. And a bridge is what connects you from buying a property or fixing it or stabilizing it or repositioning it into a place where it can be either sold or refinanced and placed into a permanent loan. So it's pretty much a band-aid to a certain situation. Most investors, for them to buy something and make money and for it to worth their while to invest in it, it has to have some sort of an issue most of the times. So you either need to fix it up, or maybe it's not leased, so you need to buy it and lease it. Maybe the leases are below market, so you have to switch the tenants and or wait for the leases to roll over, and then you can increase rent. So there's always something that needs to happen for you to create that equity or really profit, because we all know that you usually make your profit at the purchase and not at the sale of a property, right?
Yeah.
And that's where it comes from.
Got it. So, what is so someone getting into a real estate project? They what's the best way to know if you need a bridge loan or a construction loan or any other type of loans? How do you know what kind of loan to use? Could you give us an overview of maybe some different loans for real estate investors and deal
Yeah,
makers? Give us an overview of different types of loans.
absolutely. So a construction loan is really when you want to build something from the ground up, right? So you buy a land and you want to develop it, build something, whether it's a spec home, like a single family, or a condominium, or a multifamily, or the industrial asset class is exploding right now as well. So there's a lot of construction there too. So construction loan is really for just building, right?
Mm-hmm.
On the other side, you have permanent loans, which is when you want to keep holding the property and enjoy collect the income from it. So whether it's a rental or an Airbnb or a multifamily or a shopping center or a hotel, whatever that may be, those loans are typically 5 years plus. So 5, 10, 30 years if it's a residential investment property. In order to get to that point, the property needs to be stabilized, the income needs to be good, and the income from the property needs to be able to support your debt. So it needs to support the mortgage. In order to get there, you can either buy something that is already stabilized, so you just do a buy and hold, you just purchase it and hold it. But a lot of times you will need to buy it and fix it or stabilize or reposition or do all these things for it. And that's where a bridge loan comes into place. And that's a very flexible niche. That's really something that it covers a wide range of situations. And there's bridge loans for pretty much any type of real estate. And in most cases, if it's not something that you build and it's not something that fits right now to get a permanent financing on it, a bridge loan is probably the solution if you want to own that property.
Got it. Now I'm looking on your website, which is onyxfundingllc.com, and I'm seeing that you do commercial, fix and flip, rental, and then refinance, fix to rent, new construction, multifamily, bridge. Those are the kind of the main categories.
We do everything, right? The website is actually onyxfunding.com. So we switched the domain.
Got it. Cool. Sorry, I got the wrong one.
No worries. No worries. That's actually something relatively new. I think we did it like a couple weeks ago.
Awesome.
So yeah, those are more like situations, right? So whether you want to fix and flip your property or fix and rent, like buy and hold, that's something that is extremely popular right now. Or if you want to buy a multifamily, you need to rehab it and lease it up. So in order for a multifamily to be able to be refinanced or placed with a permanent loan, has to be 90% occupied for a certain amount of time. So banks and institutional lenders, when they go into a property like that and they want to finance it, they will look at the historical financial performance of the property. And as long as that's good, you can get a loan from a bank or a credit union or an agency lender. And if that's not the case, you can either buy cash and do it yourself, or you use a bridge loan to bring that property into a place where it can sustain a permanent loan.
Yeah. When it comes to fix and flippers, right?
Yeah.
Looks like you have a program for fix and flippers. First of all, like what is the difference between just a regular loan and then maybe a fix and flip kind of loan? And then how do you serve that real estate investor in like market? How do you do that?
Yeah, great question. So the difference between just a regular bridge loan, for example, and a fix and flip loan is that it has a rehab component to it, right? So you'll get a loan to purchase a property, and that can be anywhere from 70 to 90% of your purchase price. And then you will have another separate component. It's basically the same loan, but that's going to be money to help you rehab that property. So whether you're buying something, let's say you buy something for $1 million, it's a nice home, you want to fix it for another 150,000, you'll get, let's say 90% from your acquisition to purchase the property. And then the lender is going to place $150,000 in escrow for you to be able to rehab that property.
Yeah.
Right. So
yeah, no, keep going with this because
yeah.
there's a lot of fix and flippers. There's one guy right next door, so this is good. And why is that valuable? Why is that loan type valuable for fix and flippers?
So I mean, it depends on every person's strategy. For the most part, I mean, in most businesses, the first rule is use other people's money. And that's really what it is. These loans are, I mean, now it's a little bit more expensive because obviously the entire market has higher rates, but those loans are very, very flexible. It's 12 months, 12-month term, interest only, no prepayment penalties. It gives you most of the money to do it. So if you're a fix and flipper and you buy one house and you do it all cash, then you can typically just do that property, right? And if you use financing, you leverage your funds, you can do that property with only 10% down, plus closing costs and carry costs, whatever. But you're able to just scale your business or go into it with not, if you want to buy something for 350,000, you need to have 350,000. Or you do it with 50,000 and you get a loan, right?
Right.
So loans help fix and flippers just either do more volume and reduce their risk of just cash flow.
Yeah. I have a lot of guys who reach out to me, having this show, we get a lot of people that reach out and they go, hey, I'm looking for money. And I say, okay, talk to me about this. And they go, I want to be a fix and flipper and I'm looking for money. I go, do you have a deal? And they go, no, not yet. I say, go find the deal. Then we could find you the money.
Right.
Is that your view? Which comes first? Should you find the deal first or should you try to find the money first? What are your thoughts?
The money can't do anything without a deal. So it's definitely deal first. You can learn how the money works. So it helps you navigate the deal market, right? And see what makes sense. But I don't have anything to do with someone if he doesn't have a deal. We come in when the deal happens. Now, on the flip side, we do have a lot of clients and a lot of our relationships and people that we know always look to buy and sell. So a lot of times we don't do investment sales per se, but we will leverage relationships and put people together, and we can help connect people with deals. But for the most part, it's from the money perspective, it's deal first.
Yeah,
Absolutely.
Find the deal, which is sometimes the hardest thing to do because you have how many lenders do you have relationships with?
200 and something. Yeah.
So,
more than 250.
Yeah, and by the time someone says, "Okay, I have established, money," I go find a deal. The money could change because rates go up, the market could shift, all sorts of regulations could change.
Yeah. Absolutely. Also, it depends on the property, right? Like, so like there's Fix and flips are usually between 100,000 to like 5 million, or let's say between 100 to 2 million. That's where most fix and flip lenders play. And those are for mainly like single family homes and stuff like that. But when you go into the commercial side, there's different lenders for different purchase prices or different loan amounts, right? Like there's some lenders that will not look at anything that is below $20 million or $50 million. So it opens up a whole new world when it just depends on the deal that you're doing, you know, or location. Like a lot of lenders don't lend in certain places and their terms change in certain places.
Yeah. Yeah,
So
absolutely. What about you? Where do you do deals? Are you strictly in Florida, US,
no, we're
global?
not global, but we're nationwide with the exception of Nevada. So we do loans everywhere.
Why not Nevada?
Just a licensing thing.
Yeah,
It's a
I
separate license.
I understand that.
Yeah,
Awesome.
we'll
So,
get there.
oh yeah, awesome, man. And you have a team of 10 now, right?
Yeah. Hmm.
So, really great job, you know, building this out and building that. What's the future look like for Shaun as a deal maker?
Good question. My focus now is really building the team and focus on hiring and building our just image and brand, right? So that's my focus now. Um, Over the next 3 years, we'll probably be, about 30 to 40 people. And what I want to do is to be able to offer our clients more value. So right now we're doing financing and we're doing some, like I said, like we connect some, wholesalers or off market deals with some people. So we do that. We do some advisory, but it's really to hone on that and basically build vertically so we can offer our clients just more value so we can empower them to get out there and do what they do best, which is, find deals and make them happen.
Yeah. As you're looking at deals all day long, right? You get a tremendous amount of deal flow. What kind of deals would you be personally interested in, or do you just stay on the side of debt? Like, what about you?
What am I buying, for example?
Yeah, like what kind of deals do you like? Do you invest in technology, real estate, commercial, residential? Like,
Yeah, so
what's your
I'm
theory?
I'm not really investing in real estate yet, really. We do participate with some of our clients as equity investors or preferred equity, so we like to do that. Um, but most of my focus right now is the business. So,
Got it.
so just growing the business.
So when it comes to on the side of equity, right, as preferred equity investor, you take a look at a project and they have a gap, right? So they need
Right.
$1 million for the project. They only have 50 grand. They need to come up with X is that where you guys step in?
Oh no, absolutely not. If someone comes to me with $1 million project and they have $50,000 in the bank, that's not going to work.
Okay. Where
Um,
do you guys step in?
So if someone has a $10 million project and they have a loan that is 65%, for example, so 6.5 million, and they have another 2 million, so they're at 8.5, and you need another 15% of that or 10% for their capital stack. That is where that world plays with, like that's the gap needs to be a lot smaller.
Yeah.
you know
Yeah.
um, yeah. So usually what we see on the preferred equity side, which is a very tough and tight market these days, especially, and it is something that is always, at least from what I'm seeing historically, has been the one thing that always has more demand uh, than um, than availability. Um, on the debt side, that's the opposite. There's just money trying to find the good deals, right? And then you can get selective, and it's a very competitive world. It's not as much on the preferred equity side. It's just there's just more risk. It's a different world. Um, but what we typically see is that preferred equity investors, or even when we want to participate in a deal, we want the sponsor to have at least 10% actual equity and the deal. You have to have skin in the game.
Got to have skin in the game.
You gotta
Yeah.
have skin in the game.
100%. I agree. So as you're building out your sales team, what do you look for in a salesperson, right? If you're like, I don't think this would be a good fit, or you would be great. Like, how do you know if someone's going to do good in sales or not?
No, that's a great question, and that's something that I've been, hiring has been one of the hardest things that I've had to do in Miami.
Yeah.
I don't know if it's Miami itself, or if it's just the situation with like COVID and the work from home and and the checks and all that stuff, that the people have less of a desire to work. You know, um, what I look in someone is for look, being a loan originator is it's a tough job. You have to be good in sales. So, relationships and charisma and confidence and energy, and have grit and hustle, and, try to go like a hunter's mentality. And on the other side, you have to be good with problem solving and being analytical and working with documents and Excel sheets, and, you know, talking with lenders and writing emails, which is kind of a contrast. Usually you don't find these two and the same person. It's either you're really analytical or you're very good at sales, right? So that combo is something that is it's tough to find in someone.
It is
Um,
tough to find that. Yeah.
Absolutely. What I've done now is, and we've tried different structures, but what we're doing now is we're hiring for sales. So we're looking for people. We have a lot of leads. That's one of our strong uh, uh, suites in terms of a business, is that we have, we're able to generate a lot of good leads for financing, right? So what we're doing now is I'm hiring specifically for people that will just do the sourcing, deal sourcing, relationship building, business development, get in front of investors, get in front of these developers, let them know what we do, hunt their business, try to win, right? And on the other side, we have the loan originators, which also do that. But I mean, look, once you have a pipeline of 20 deals that you need to originate, the likelihood of you making even 10 calls a day is just almost impossible. It's just like,
Yeah.
it's so demanding. It's tough. So we have it split to new business and origination, right?
Yep.
So a place where you can start and just have conversation, talk to people, look for the deal, and not worry about underwriting it and getting it done. And, that allows our sales team to, be able to just generate a lot of new business faster, see more deals that they get to work on and experience and, cut their teeth on, while someone else is really taking care of that deal once it's submitted into the origination side. And that learning curve for them is a lot smoother. You know what I mean?
Mm-hmm.
So for the ones that show the skills that are also transferable and, will be good for the origination side, they can, we then promote them to being their own like loan originator, run their own book of business. But some people just enjoy the hunt. It's just very different worlds.
Yeah.
So
Yeah.
splitting
I'm
it
a
really
hunter.
helps.
I'm a hunter through and through, right? Like deal origination, top of funnel, that's fun for me. And I have a team of people who kind of manage the middle, which I would drop the ball on, follow ups and
Yeah,
this and that. I'm good at cracking open new deals, new relationships. So I
absolutely.
think that's really smart. What you did there is, sometimes there's super people out there who are like superhuman and they got the best of both worlds. That's not me. I'm really good at one, terrible at the other. What about you? Where are you better at or worse at?
I'm the free combo kind of,
Oh,
because I'm
cool.
I'm really good at both. What I enjoy though, what I like is, like, I'm a salesperson. I'm good in I like the hunt, I like the sale, I like to talk to people and all that stuff. But I'm also very good at the other stuff, which sometimes is not good for a business owner, or, like, you have to delegate a lot of these things. So that's kind of like something that I'm working on constantly, is to be able to not do some of these things and kind of like let loose of the control, you
Yeah.
know.
Got it. How long did you spend in Israel? You were over there from age 4 to how old?
27.
How many languages did you pick up?
Oh no, I just know Hebrew and English.
Okay, just you read.
It's Hebrew and English.
Yeah. All right.
Languages is not my thing.
What language do you dream in?
That's a very good question. I've Now it's mainly English. So I speak English all day. I now think in English.
Yeah.
I do talk to my dog in Hebrew sometimes. So me and him have our own thing.
You have your
But
Hebrew relationship with the dog, right? Like that's
right,
awesome.
right, right. Also, like we have a lot of, Israeli clients, Israeli investors. So I do speak still a lot of Hebrew during the day, but it's mainly English. Also in Israel, the past like I think 5 years before I moved to the US, my work was mainly in English. So we worked with Israeli fintech companies, but they were like, global startups selling to Europe and Canada and Australia and Asia and stuff like that. So it was mainly English for a lot of that period of time before moving here. So now most of my dreams are in English, unless it's a more exotic feel.
Yeah, right on.
I'm joking.
Yeah. When
Yeah.
do me a favor. This is the Deal Scout, the show The Deal Scout, and my name's Josh. Give us like a in Hebrew, say, welcome to the Deal Scout, a show hosted by Josh. Hope you enjoy, or something like that. Could you give us a plug in Hebrew?
Sure. ברוכים הבאים לפודקאסט של ג'וש ווילסון. This is pretty much what that is.
Awesome, man. Thank you very
Yeah.
much. We were over in Israel in 1998 for the 50-year jubilee of becoming a nation.
Oh yeah.
Yeah. So the food, the music,
Amazing.
the culture, amazing.
Yeah.
What
Yeah. It's
food?
amazing.
What food do you miss the most?
Damn. Probably shawarma. Shawarma,
Yeah,
hummus.
a good
Like
hummus.
the real,
Yeah,
authentic.
get some
Yeah.
falafel. Yeah, good
Yeah,
food.
there's a few good places here in South Florida, Ventura, Miami, but it's not the exact same.
Yeah, awesome, man. So, sorry, back to deals. So, we're doing some fix and flips, and a real estate group works with you. At what point is it better to go maybe hard money versus a program like yours, the fix and flip, or is it the same thing?
Hard money and fix and flip are usually very similar, if not like usually the connotation is the same,
Hmm.
right? Um, Hard money in my world, like coming from the financing side, hard money is typically going to be, more like local hard money lenders that will give you anywhere from, I mean, leverage really depends on the person, but the rates are typically higher. So 10, 12%, a couple points, pretty aggressive people. They close very fast. They don't ask too many questions, but they're not the most flexible in terms of if you need an extension or if you need these things. So it's good if you have a relationship with them and you keep local. That's fine. We typically work with the more national debt funds. So they ask more questions. They require more documents. They will vet your deal a little harder, but the cost of money is a lot better, and you work with someone who is his everybody's on the same page wanting to make the deal happen and successful throughout, so they're more helpful, they're more flexible, stuff like that. So kind of just also like as a rule of thumb, the easier it is to get the money, the more expensive it is, and on the other side, the harder it is to get the money, the cheaper it is.
Yeah.
you know
That's a great rule of thumb. A great if it's easy to get, it's probably going to be expensive. The harder is probably
right.
because you got to work for it. Shaun, this is really cool. During this conversation, there's probably a question I should have asked you about you or about your industry or about the deals you do. What question should I have asked you?
Oh, that's at itself is a good question.
Thank you.
What you should have asked me, I guess. What's next for the real estate market in general?
What a
Um,
weird time. September
it's insane.
2022. What do you see in the industry, in the real estate market, and what are your thoughts?
Yeah, it is definitely very it's very interesting times.
Yeah.
I think from our seat as loan brokers doing deals nationwide on most property types and most situations, we kind of have this bird's eye view on the broader market, and we're not just the local situation, because a broker that only does deals in Miami lives in the Miami bubble that everything is going up 30% a year, versus someone who's in Phoenix, Arizona, or Boise, Idaho, and their inventory is surging and prices are starting to cut down. Um, as a market in general, it's tough to say really where this is going. Rates are obviously going up. The economy is in a weird place. Inflation is at, what is it, 8.2%. So what I think is that we'll see a little bit more pain in terms of increased inventory and rate hikes for the next about 6 to 9 months, probably towards until the middle of 2023. Hopefully by then we can stabilize what's going on, and I believe that about 6 months after that, so going into the new year of 2024, we'll start seeing things coming back to normal again, and hopefully they will reduce the rates back to, I mean, probably not where we had them, because that was historically low, but at least to a place where the market is healthy, and deals are happening, and it's a happy place for everybody.
Yeah. What we're seeing is, my gut tells me, because I was in real estate and construction since early 2000s, so I got to see many different types of markets. I think that this is going to be a great opportunity for investors, fix and flippers, and investors, and people on the sideline waiting for good deals. Because over the past 2 years, real estate has shot through the roof, and I think that
Extremely.
there's a lot of people, waiting for good value. Because you mentioned it very early in the conversation, money is made when you buy something, right?
Right. I mean, look, good deals happen. They exist everywhere.
Yeah.
They exist. An opportunity can come when the market is high, when the market is low. Opportunities um, can arise in any different or any scenario, or wherever the market is. Broadly speaking, maybe the values will come down a little bit later on, but also the money is going to be more expensive, right?
Hmm.
Maybe it's going to be harder to rent. So it's tough to say, but I'm with you. I think that if someone is patient and they can wait and they have the capital, more opportunities will come later on. But if you're open to it, there's opportunities that can come, at any given moment. Look, there's about $450 billion in loans maturing in 2023. So there's always a loan maturing somewhere. A loan
Yeah.
maturing means that someone needs to either refinance or sell, right?
Yeah.
So there's opportunities are always there. It's a question of what is important to you. Do you want lower cost of capital? Do you want to buy lower? Do you want to each his own in terms of strategy. We are seeing the same amount of volume. We're definitely seeing less people refinancing, because a lot of people that had to refinance did that this year earlier when the rates were, lower.
Hmm.
So it shifted from the past, year and a half or so, or 2 years, from a refinance market into now a purchase market.
Yeah.
So yeah, I think the volume is going to be, in terms of deal velocity, we're going to see the same thing. I mean, obviously on the sales side, you have a multifamily. 6 months, a year ago, you'll have 40 people bidding on it. Now maybe there's six, right?
Right.
But the deal still needs to happen at some sort of manner.
Yeah. So with that, Shaun, for fellow deal makers in the audience who want to connect and do a deal with you, what's a good place to connect with you at?
Yeah, LinkedIn, email, phone number. We're 24/7.
and it's Onyx, Onyx Funding.com is the new website. Awesome.
That's the
And
website.
and
Yeah.
how do you pronounce your last name, Shaun?
Ashkenazy.
Cool. So,
Yeah.
all fellow deal makers in the audience, all his contact information will be in the show notes. If you're looking for different types of debt financing for your real estate investments, head on over to onyxfunding.com, fill out a quick form, and maybe do a deal with Shaun. If you have a deal that you'd like to talk about here on the Deal Scout, head over to thedealscout.com and maybe get you on the show next. Hope you guys are having a great day. Talk to you soon. Bye bye.